Hey guys, so in today's video, I'm going to be teaching you the most simplest and easy to use ICT trading strategy that if you can master will help you not only pass your funded account challenges, but also get massive payouts. In today's video, I'm going to be giving you a breakdown of this trade that we actually took inside of the VIP group. Here's me sending the sell limit at 308 today, and we also hit take profit for a nice 1 to 7 risk to reward. So not only are we going to be breaking down this trade, but I'm also going to give you my full checklist that talks you through everything you need to do to make sure that you frame up an A+ setup. So let's jump back onto the charts, and before we actually break down the trade, let me give you a look at exactly how to frame up the Judas swing. So first things first, we really need to understand what is our overall directional bias. Are we bullish or are we bearish? Now we need to understand this because as long as we understand the higher time frames, the lower time frames are just going to confirm what's happening up there. So if we're in a bearish trend, we're only going to be looking for shorts, and if we're in a bullish trend, we're only going to be looking for longs. So having said that, we understand that our directional bias is either long or short. We then wait for a build up of the Asia session. So for me, the Asia session is between the times of midnight and 7 a.m. UK time. So anything that happens between these times is now considered our liquidity. Now, once we've got our liquidity points, we're then simply going to wait for price to either sweep the high or sweep the low. Once we get either the sweep of the high or the low, we're then going to wait for our entry criteria. And in this case, we're actually going to be waiting for a market structure shift. Once we get that market structure shift, we're going to identify the key area of interest, such as a fair value gap or an order block that gave us that market structure shift. Now, in today's example, it's actually going to be an inverse fair value gap. And if any of these concepts are foreign to you and you don't understand, then click that link down in the description to go ahead and watch my full course, which is going to give you everything that you need to know from A to Z about how to become a consistently profitable trader. But once we've got our entry criteria, we're then going to take our entry right there, and we're simply going to target the opposing liquidity. So if we sweep the high, we're going to target the lows, and if we sweep the lows, we're then simply going to target the high. So it's nice and simple, and a good thing about having a checklist is that every single trade will be the same so long as you follow that checklist. Let's actually go ahead and break the higher time frames down on today's trade. So if we jump up to the 4-hourly time frame, what we can see is that NAS 100 is very clearly bullish. We're putting in a series of higher lows, higher highs, higher lows, and higher highs. On the higher time frames, we are actually bullish. We come down to the 15-minute time frame, and again, it just confirms our overall trend and direction, and that is that we are bullish. Now, from the beginning of this video, you've seen that we actually took a short. Now, you're probably sat there asking me, why did you take a short? Well, the one thing to remember is liquidity plays a key and pivotal role in the markets when it comes to trading. So what we can see right here is that last week, this was our highest point that the last week went up to. This is now our previous week's high. Not only that, but it is also our previous day's high as well. So that means we've got a ton of liquidity that is sat right above this high. That price is definitely going to look to target at some point. Understand that our higher time frame is bullish. I've identified that we have a bunch of liquidity that is sat right above this previous week's high and this previous day high. So having said that, we now come down all the way to our entry time frame. That is going to be the 5-minute. So now let's go over to our checklist. We can tick off the first box, which is our directional bias. So once we've ticked that off, we move on to the next step, which is to mark out our Asia session range between the times of midnight and 7 a.m. UK time. We then also wait for a sweep of liquidity. So we wait for a sweep of the high or the low. So let's go back to the charts and actually mark out the high and the low of the Asia session range. So here is a midnight with a nice vertical line, and here is 7 a.m. So now that we've got trading range that we're going to be using, we now find the highest point of the Asia range and also the lowest point of the Asia range. Once we mark that out, we've now got our pools of liquidity. So not only are we going to be waiting for price to sweep the Asia high, but we also want price to come all the way up here and sweep this previous week and previous day high as well. Because if we get that, we've got a double confirmation that price has just taken double the liquidity, which means we're probably going to go lower. So once we understand that, we now wait for price to actually sweep the Asia high. And if we get that, we then wait for price to sweep the previous week's high. So when the markets opened this morning, we actually had the perfect sweep of the Asia high right there. And then price did chop around for a while. And then eventually it did go. And in the afternoon, it gave us a nice sweep of the Asia highs right here. Now, one thing that I really need you to watch and understand, when does price actually go and sweep the previous week's high? Well, if we take a look at this candle, this is exactly at 2:30 p.m. UK time. Now, 2:30 p.m. UK time is the New York Stock Exchange open. Now, when the stock exchange opens, there is a ton of liquidity that floods into the market, a bunch of orders that are being executed, and this means the markets kind of go haywire. This is what people believe is happening, whereas what's actually happening is price is strategically using it to its advantage to go and seek out these pools of liquidity. So what did price do right here in this 20-minute sequence? Price opened at the New York Stock Exchange, jumped up, swept the liquidity that was resting above the previous week's high, and then it had this massive bearish push to the downside. Now, what did this do? It induced a lot of sellers into the market because a lot of people thought right here, oh, I'm just going to jump into sales because look how much bearish momentum there is in this market right here. And what happens? Everyone gets taken out by this massive push to the upside. So if we actually go ahead and replay this, this is what would have been happening in people's minds. They would have seen this massive bearish push to the downside, and they would have actually entered their position right here, hoping for, some sort of a market structure shift to the downside. And what happens? Price then just absolutely takes all of them out. So now that it's taken everybody out, what do you notice? Price just taking out more liquidity from previous day and previous week's high. Once it does this, what does it do? It also gives us this retail trading pattern known as the morning star, where you have a bearish move to the downside, a doji candle, and then a massive correction to the upside. What else does it leave? It also leaves an inverse fair value gap right here because this fair value gap got absolutely disrespected. But we know that price is going to be seeking the liquidity that is above previous week's high. So we're not looking to go long in this market because we know if we go long, that is just bad news because we've also swept the Asia high. So now we're actually anticipating price to come and take out the Asia lows. So now what we're doing is we're confluence stacking. We then zoom out a little bit, and what else can we notice? We can see that right here, we've also got a buildup of this trend line. So there are so many confluences telling us that price wants to go lower. So all of these beginner traders that have just seen all of this happening right here are going to think, that's it. I'm going to go in for a long because there's so much momentum to the upside right here. And what does price do? Absolutely takes them out as well. This is what price does. It engineers liquidity and then it takes out liquidity. And you as a trader have to understand the footprints that price leaves behind in order to read the data that is presented to you so you can take these A+ setups. But now that we've understood that price has just engineered liquidity and taken out anybody shorting, then taken out anybody longing, we now know that the markets have kind of settled. Price has done what it needs to do, it's taken the liquidity. And now if we actually zoom out and we take a look at what market structure is doing, what can we notice? Well, price put in this higher low, higher high, higher low, higher high, and then we had a market structure shift where we've now put in this lower low. That means we've shifted from a bullish to a bearish structure point. We can start looking to enter into our position because we've just checked off the next box on our list, and that is the 5-minute market structure shift. So now that we've ticked that off, we can move on to the next step, which is to find our entry confirmation. And that is going to be the fair value gap, which created the market structure shift. And we're simply going to be targeting the opposing liquidity, which in today's case will be the Asia lows. So coming back onto the charts, what can we notice? Well, first of all, we've got one fair value gap right here. Then we've got another fair value gap right here. So which fair value gap do you take? Now, in a case like this, I would always say you go for the fair value gap, which gave us the market structure shift. So in this case, I would always say that we go for this fair value gap. However, again, what can we notice that's interesting on the chart? Well, we've got an inverse fair value gap right here, which got disrespected once, disrespected twice. So this area is super magnetized to price because it's being disrespected twice where we've had sweeps of liquidity. So I know when price comes up and it taps into this area, if our understanding of the direction is correct and we've read price correctly, this should be the point that price stops at. We then put our stop loss just above the high. And where do we target? As always, we target the opposing liquidity, which in this case is the Asia lows. So that is how we frame up the trade. That is how we read what price is telling us on the charts. We've understood that we've got a ton of liquidity that has been built, seen price engineer and sweep everybody who was early into a short position. We've then seen price engineer a bunch of liquidity to the upside and taken out anybody who was trying to buy the market. And then it's finally given us that market structure shift, telling us that the price is now looking to go short. Once we've done all of that hard work and we've understood exactly what price is telling us, we can now sit back and just simply wait to see what price does. Now, in an instance like this, it's either going to be a stop loss or a take profit. There is no in between. We simply enter after following our checklist and then we sit back and we relax. We don't worry about what price is going to do. It is a probabilistic game. We're either going to win or we're going to lose. That's it. So long as you followed the checklist and you've ticked off every single box, all of the criteria has been met. This means it is an A+ setup. You've done everything that you can. You've done the hard work. Now you just let the trade play out. So if I play price on, what we can see is that we get tapped in. Price then does chop around for a while. However, after that, we finally get that push to the downside, which takes us all the way to the Asia lows, giving us a sweep of the opposing liquidity and hitting our take profit. And as you can see, I sent this exact trade into the VIP group with a screenshot of the before, a screenshot of the after, the numbers, everything that you need. And if you are looking to become part of the VIP group, hit that link down in the description so that you can start taking these trades with us every single day. But if you don't want to do that, then I highly recommend you rewatch this video to see exactly how I framed up this chart work, how I understood what price was trying to tell us, how I stayed out of the early sell, how I stayed out of the buys, and then we eventually took the shorts that actually gave us the profits. So I hope you guys enjoyed this video, and if you did, then don't forget to leave a like, comment, and subscribe. But on that note, I'll catch you guys in the next video.